All right, so let's now start. Number one reason why you need to invest in the Nigerian stock market is that information is local to us. What do I mean by information local to us? We are in Nigeria. Today, I've taken transport. Those transport company or those transport service provider have bought fuel. So one way or the other have interacted with Dangote refinery. One way or the other have interacted with Wando. Any company that is into oil and gas have interacted with them. When anything is happening to that particular company, we are the first to feel it. These are products that we react to on a daily basis. When they are struggling, when anything that is happening to them, we are the people consuming the product. We can easily relate that, oh, this particular product, the reason why their prices are going up is this. The reason why this is happening to this company is this. So that is it. Information is local to us. Whatever that is happening in the news, we can all easily hear because we are in Nigeria. That's one advantage. The second advantage is that these stocks are too cheap. People that are poor, they said they are living below $1. $1 now should be around 1,500. Let's now say even it's 1,000 naira. Now imagine a poor person can still afford to participate in this market. So there is actually no excuse. With $1, you can buy like 50 units of Access Bank. And if I ask you now, you will be having Access Bank as your bank. If I take a poll now that, okay, how many people are using Access Bank? I will see one or two people that will say they are using Access Bank. So if you can be using Access Bank and you don't have shares in Access Bank, and Access Bank $1 can actually give you 50 units of Access Bank, 50 units, just $1. If you go to the US market, if they are selling a stock for $300, how much is that in naira? And you now say it's still not cheap. It's in fact it's too cheap. And I like to talk to younger people these days. I like to talk to them, especially people, teenagers and all. I'll tell them you have time at your advantage because yes, you might be thinking, I still have time. It's better you start investing in the stock market now because in the next 10 years, in the next 15 years, you will thank yourself that you did. You will thank God that yes, I participated in this market. So what am I saying? The market is cheap. It's cheap. It's about the cheapest market that I know. Come to think of it, any bank in Nigeria now, they are cheap and we can participate. If you now want to do, okay, let me sector analysis and say, okay, will the banking sector still be relevant in the next 10 years? If you ask me, I will say yes, they will still be relevant because people will still need their service. Know how, they will still need their service. Whether you like it or not, Access is still opening branches all over the place. All right, let's move to the next one. It's what we consume daily. These are things we consume, like fuel that we buy, we consume it, the food that we eat, the flour, you've taken transport, you've brushed your teeth today. There's no way you will not interact with this product. There's no way. So these are things that we consume on a daily basis. And if you want to know a sector or a company that will last, that will be around for long, just look at daily need. There's nobody that doesn't cook with salt. There's nobody that will say you will want to cook, you will not cook with salt. So there's no way. Dangote salt, Dangote sugar, Dangote cement, Dangote refinery. You can imagine. We continue to use this product, and this product, one advantage that they have is that they naturally hedge against inflation. What do I mean? As inflation is growing, they also increase their price. You cannot say that inflation is growing and the prices are not increasing. Remember how much were we buying cement before? How much? Now see what the price is now, 10,000 naira. If I ask you now, things that we were buying like 2 years ago, price are over doubled, over doubled. So what does that mean? That is edging against inflation. As inflation is growing, they too will increase their prices, their selling price, because their cost of production is growing. They also need to increase their selling price, and because they need to make profit. They are there to make profit. That is just it. So let's move to the another point. The market is volatile. And what do I mean by market is volatile? The market is allowed to make 10% in a day, and it can also lose 10% in a day. So what am I saying? If the market is allowed to make 10% in a day and lose 10% in a day, if you enter the market on a day that the market has already lost 10%, and eventually something happened and the market gained 10% that same day, you have made 20%. So you can actually be 20% richer in a day in this market. You have 10 million in the morning, by evening you can be having 12 million in your account. That is just the way this market works. So let's talk about the next point, is that low entry balance. What do I mean by low entry balance? See, all the broken houses, there's, in fact, maybe their minimum deposit can be like 1,000 naira. So I cannot say, okay, even if I don't have money, every week, every month or something, just say, okay, I want to buy stock worth of 1,000 naira. Send it to your broker. They will give you whatever you want to buy. You will still see stock to buy. How much is First Bank? First Bank should be trading around, okay, I think Zenith is around 16 naira or so. I can't really remember. Maybe we'll go to the chart and we see all these prices. You now see that these stocks are actually cheap, and the low entry balance, now that it means that you can open an account with as low as 1,000 naira. You are open an account with as low as 20,000. You don't need to wait until you have big money, because this market, the way it is, I used to tell my students that, one, you need to start up before you scale up. In this market, you need to start up before you scale up. Don't say because you have you say, the market is going up, a lot of people are making a lot of money, then you now think that you can go and bring one money from somewhere and put in the market, and because your heart cannot carry the risk that is involved in the market. I need to also tell you that there is risks involved in the market. I said the market is volatile. You can make 10% and lose 10%. So what happens if you now enter the market on the day that the market has already gained 10%, and that same day he lost another 10%? He lost 10%, making 20%. Can your heart carry it? That's another topic. That's trading psychology, but we are not going there. So let's talk about this low entry balance. Means that you can come in as low as possible, as low as you have. Just come to the market. The market will take you. The market is not waiting until you have that big money before they can take it. They can take as low as 1,000 naira, as 2,000 naira. So there is no excuse. No matter the level you are, you can participate. And if you are very rich and you think, yes, I have enough money to put in this market, the market can accommodate it. We have people trading portfolio of 10 million, 20 million, 200 million. You cannot say, my money is too much for the market. I will show you the turnover per day of the market. We will also go there, and I will give out one secret code that you can use to even know what is the market doing using ChatGPT. We are coming there because that's also an advantage that we have in the market now. That's an advantage. Technology is a big advantage to this market, and a lot of people are not aware. And the advantage you are having listening to me today is that you have an edge over them. You can only make money more than other people when you know more than them. You need to know more than other people to make money more than them. Okay, today I do technical analysis and I teach people to trade using technical analysis. I make money doing technical analysis and I teach it. And a lot of my students also, they are also making money doing the same thing. Why am I saying technology is not an advantage? So if you can easily put that technology at your advantage, you will have an edge over other people. The stock that you are buying, somebody is selling to you. If that person that wants to sell to you knew that the stock will go up, will not sell to you. So you need to know more than other people to make money in this market. Market does not give you money. Market does not give anybody money. Market gives you based on the knowledge of the market that you have. So you make money based on the knowledge of the market you have. The market is neutral. It doesn't know anybody. It's the knowledge that you have over others that gives you an edge and that gives you money. So another point that I'm going to consider is dividend opportunity. So what is dividend opportunity? If you buy a share of any company, you are a part owner of that company. That's what it means. For holding the share of that company, when the company makes profit, Dividend is what they give you as a reward that, okay, thank you for banking with us. Thank you for investing with us. So when they do their report and maybe after the year end and they now come up with their annual annual report and they declare profit and they said, okay, on each of our share we have made maybe 10% extra on each share. Okay, out of the 10% that we make, okay, we are going to give our investors maybe 2% or 5% or 10% of the earnings. What they make is the earnings. So when they now make the earnings, out of the earnings, they can give you dividend. Then the remaining, they will put it back into the business because they also need to grow. They also need to expand so that they can make more money. All right, that's dividend. So we have that opportunity in this market. And what is the advantage of dividend? So if you are holding a dividend stock, let's say you are retired and you are not really working now and you need cash flow because at that level you actually need cash flow. It's cash that keeps us running. If you continue to buy assets and the assets are not generating returns, we have different classes of assets. We have assets that are reproducing, assets that are generating, assets that are multiplying. If your asset is not generating anything, there will come to a time when you need cash flow, you now go and sell that asset. It's like having a cow that is producing milk. Your cow now stops producing milk. You don't have any other source of income. You need to go and sell the cow. You have lost everything totally. But in the case of dividend opportunity, the more the stock you have, the more the dividend you can earn. So what I used to advise my community member is that as you are trading, make sure that you have some other stock that what you are using to build your dividend portfolio so that a time will come when you don't really have time to be running around checking the chart or anything. You can depend on that cash flow. That's okay. At the end of the month, the cash flow can take care of your monthly expense. All right. So let me see how much time do I still have left. Okay. So economic growth potential. Growth potential, I think I've talked about this. Okay, I've not talked about growth potential. So growth potential is just when you buy a stock or buy shares of a particular company, the price is actually allowed to move up and down based on demand and supply. So based on demand and supply, price goes up, come down, goes up, come down. But in the long run, if it's in a good sector, the market will be going up. It will be going up. So as it's going up, the price of those stocks are going up. Let me share this story with you. I used to work with my former boss. He's late now. He was working in Nestle Nigeria. But when he was working in Nestle Nigeria before he retired, he used to buy Nestle shares every month. And he has someone that he used to call. The guy will come to their office. We might give him at times 200,000, at times 300,000 to buy shares for him. Buy shares. When he retired, and I was working for him, he now became a contractor in Nestle. When he got to a time, he showed me his portfolio and told me, I think he was having like 8 million or something like in Nestle share. When he was buying Nestle share, I think Nestle share was around 200 naira and Nestle grew to 1,000 naira also. He said the money that I saw in that account, that is only the money that he gained from bonus. It's only bonus that is was remaining, that he has sold all his shares. That what he bought, that he has sold everything. That what is left is only bonuses. If he can have bonuses in a figure of 8 million, I can't imagine how much he has made. He said he has made a lot of money in that stock. And what is the advantage that he has? Time. Between when he was working and when he retired, maybe like around going to like 10 to it should be more than 10 years. You can see the growth potential that we are talking about. Some people bought Nestle share at 20 naira. Now the share is at 1,000 something, and you now think they will sell. That's shareholding structure. I'm diverting now. So let me not go there because when you want to buy shares, also you need to consider the shares holding structure of that company. If the share of that company is too maybe it's in the hands of maybe some people that are not willing to sell, it's going to affect the movement of that particular share. I will share something on my screen now when I finish this slide so that I will be able to explain what I'm trying to drive at. So let's move to the next point: access to strong sector. What are the strong sector that we have? One, you already know that banking sector is strong. telecom is strong. Maybe agriculture also, they are strong. These are sectors that are in high demand. If I want to start a bank now, you know the process, you know the capital that is involved, the things that I need to put in place before I can start a bank. But here, the bank is already running. All we are telling you is just come, bring your little money, come and partake from the bank. It's like I said, okay, I have a bag of rice, and this bag of rice maybe it contains 1 million grain, or let's say 10 million grains. And I say, okay, come as you are, any grain, number of grain that you can take, come and take. Some people will say, ah, I can only take two, take five. Some will take 100, some will take three, some will take. At the end of the day, we shared it among ourselves. If I ask how many people have rice, we all have rice. We all have rice. It now depends on how many units that you have. So another point that I will share now, then I will have to end this meeting, is the gateway to African market. What do I mean? Nigerian stock market is actually one of the largest markets in Africa. It's one of the largest markets. So let's talk about some of the advantages also. I don't think I put on that slide. Is that technology is now at an advantage. What do I mean technology? Everybody knows about ChatGPT. Before, if you want to do stock analysis, you want to know maybe the history of that company or anything, you have to browse, you have to go to pay for some data somewhere. I remember when we started, we used to pay for chat. To have access to chat, we were paying for it. But now with trading view, I have access to Nigerian stock market on the chat. But before, when we were using what's the name of this software? I've forgotten. That chart, we have to buy it. And they were selling it for like maybe 200,000 or 250,000 naira then to buy that chart. And even the chart is not even not live. You cannot see the live market. It's end of day data. If you're in the market for long, you will know end of day data, EOD. So after the market close, you go and download the end of day data and we now plug it into the chart, then it will now load all those stress. But now with TradingView, you can have access to it. I'm very sure that we have familiar with ChatGPT. With ChatGPT, you can actually do a lot. There are other software, but let's just stay with ChatGPT that is popular. I have like two other ones that are dedicated to financial market analysis. But let's even stay with ChatGPT. Okay, what I just told ChatGPT is to give me current market update for my stock market YouTube video. What did it tell me? It told me about the market overview. So what's the market overview? All share index close at this, gain this one per week. What's capitalization? Increased by what? 1.51 trillion, reaching this 70.462 trillion. That's the market capitalization of the year to date. What's the market? Market has gained 8% year to date compared to what it gained in this. So even looking at ChatGPT, and you can know where the market is heading. What's the turnover? Investors do this, shares worth of this in this number of deals. There's a way to interpret that. If you join my community, I will explain what all those metrics mean. So daily snapshots at 30 on the 1.9 billion shares were exchanged at these deals. And so let's go to top performance. What's top? University Press gained 76% in May. I don't need that. GT Co and Access dominated trading volume. Volume. What does volume mean? Volume means momentum. If you are a member of my community, you know what momentum means. When you see momentum, meaning that there is activity in that particular stock. So when I see that GT Bank and Access Bank, they are having volume, that means is indicating interest. The market is showing interest. Investors are showing interest in that stock. But I'm going somewhere and I hope I'm able to get there. Foreign portfolio investment. Look at it, surges. What does it mean? Foreigners are coming into the market. What really moves price is foreign investors. They are now getting into this market. What is surged by what? 162.6%, totaling what? 877 billion in the first 4 months of the year. So what does that mean? Institutional investors are beginning to see the opportunity in this market. So what if I ask you, what will you now be doing when institutional people that are outside, they are now seeing opportunity in the market, in this same economy that we are complaining that is harsh. Somebody is outside and seeing opportunity in the same market that we are. Okay, are we going to sit down and be watching them to be cashing out on our money? Because when they bring their money, they are actually the one that used to cause the volume drive. When they come into the market, there is going to be volatility. That's what it means. Domestic participation, domestic investors contributed this one, increased. You can see that it's increasing now. Policy reform, this. Okay, what's the economic indicator? Modi upgrade, credit rating, this. I'm not sure I really want this. Okay, and I move down and say, okay, do a financial, write me an overview of Access Bank also. I just want to see, okay, what's happening in Access Bank shares. And I told them, okay, in Nigeria, they said they operate in 583 branches. To open 583 branches in Nigeria, and outside of Nigeria, I think they are in over 3 continents with their subsidiary in over 20 countries. And I say, if you want to be a part of this company, bring 20 naira. And you are saying it's expensive. I don't know what can be cheaper than this. I don't know. All right, so let's go on. Their financial revenue, you can go on, go on, go on, go on. Before we don't have this, before you can have this kind of summary, you know how many reports you would have read. You know how many this thing that you can do. I can now say, okay, and I'll even ask, I want to know their highest, what's it called? Give me their 10 highest investors in the bank. Who are the highest investors? He said general public approximately 79%. I like this kind of stuff because if the general public have the majority of the shares, it will allow the stock to really move based on demand and supply. Because majority of the people, they are different people. People have different reasons to buy, different reasons to sell. So we allow that market to actually move well. Compared to when you now see that general public is just like maybe 60% and institutional investors are like 30%, the shareholding structure will not allow price to really move because institutional investors, they may be there and not sell. The owners of the company may be there and not sell. They are the majority holders. So they will not allow the stock to really move. But when I see that the general public is the majority holder, then that kind of stock is tradable because you will see every time you want to buy, you will see to buy. Anytime you want to sell, you will see to sell. There are stock that you will buy, and when you buy the stock, even though you have gained 100%, you want to sell, nobody is willing to sell. You will just see it on full offer. On full offer, yes. Everybody wants to sell, nobody wants to buy because there's no volume in that stock. So let's move on. Institutional investors, that's 1.68. Okay. Private company, this, then individual insider, this percentage. Then let's go to 10 shareholders. Estate of Herbert Wigwe is holding like 7.279% of that company. And let's talk about this foreign investor, this, this, this. You can see their percentage that's evenly distributed. It's not like the stock is in one person hand. So this is how you can actually use technology to your advantage. And another way that I teach technology is that technology is so simple now that you can actually trade on your phone. You can trade on your phone. From the comfort of your home, you can access the market without any restriction. And that's where we will end this meeting tonight. I hope it's worth the time because the time is already gone. So I will just have to end it here. So until next time, then when we meet, that will be first Sunday in July. We'll meet again for this kind of meeting. I will bring you another topic that we can discuss. So maybe that time we'll have time to interact and ask questions and all. So I wish you all a very profitable and successful week. Thank you for coming. God bless you.